Hey guys, if you're looking for life insurance for the first time, you might have a lot of questions or might be unfamiliar with the process of shopping and applying for life insurance. That's why in today's video, I decided to take some time to talk about the process of applying for life insurance. So before we begin, I just wanted to tell you a little bit about one of the most common questions that I get when people call me inquiring about life insurance. What is the price? Can you show me a table with the prices and plans? And the first thing that you should know if you're serious about life insurance is that life insurance is not a cell phone plan. I can't just pull a table and show you prices and plans because it really doesn't work that way. Now, the other thing that you should take into account is that life insurance is also not like car insurance. A lot of people that I talk to are familiar with the process of purchasing car insurance. The main difference between shopping for car insurance and life insurance is that when it comes to life insurance, you actually have to choose the type of coverage and amount of coverage that you want. So a lot of the times when shopping for car insurance, the benefits have already been predetermined by the government. So a lot of the times people are not into the mentality of trying to determine the benefits that they need for their specific coverage. And that's why a lot of people just want to ask about price. But before we even get into pricing and products, the very first step that you should take when looking for life insurance is to determine the amount of coverage that you need. Now, the way to determine the amount of insurance that you need is through a life insurance needs analysis that any agent or broker can help you complete. So let's look at an example of what a life insurance needs analysis looks like. And for this example, let's have a couple called John and Lisa. Okay, so the first thing would be to calculate the funeral expenses. Now, for somebody who's young, we can have an amount of $25,000, which is an average that would be more than enough to cover any type of basic funeral plan. Now, let's also assume that both John and Lisa have a $600,000 mortgage. Now, we put the mortgage on the calculation because John and Lisa want to ensure that their mortgage is paid off if something were to happen to them. The next thing would be to add loans and credit card debt. So let's say that John has 25,000 and Lisa has 15,000. There are other things that we could add here, such as legal fees and executor fees, but we're going to leave that blank just to make it easier for the example. Now, also John and Lisa have 2 children, and they want to make sure that if something happened to them, there is enough money to cover the education costs for them. So John and Lisa determined that the education cost would be about $12,000 per year, and they wanted to be funded for 4 years because they want their children to go to university, and they also have 2 children. Now, we're also going to take into account the current available RESPs because obviously if they have already saved that amount, it can be deducted from the total need. So let's say that John and Lisa have already been able to save $40,000 for their RESPs for their children. Another thing to take into account would be an emergency fund, which would be about 3 to 6 months of household expenses. So for this example, let's just say it would be $30,000. Okay. Again, you can add other things such as gifts, charitable donations, but we're going to leave it at that just to keep it simple. Okay, so we completed the first part, which is called the cash needs, or also known as immediate needs. So you can see both John and Lisa have a different amount of $736,000 and $726,000. And that would be basically because Lisa has a little bit less debt than John does. Okay. So now when it comes to income needs, this is the amount of money that would be required to maintain your family's lifestyle. So when we calculate the annual household income, a lot of brokers like to put in the gross income, but the truth is that I always like to use your net income. And the reason because it's not about how much money you make, but how much money you keep. So for this example, let's say that their household income after taxes is $120,000. Now, this is another things where brokers would actually give you a different amount to try to sell you more insurance. So percentage of annual income if you die. Like most people would think that they need 100% of their income if they die. Well, the truth is, if you remember when we completed the mortgage on payment, obviously a large sum of that income goes towards mortgage payment. However, if your mortgage is already paid off, the truth is that you will actually need less income uh, to be able to keep your family's lifestyle than if you had a mortgage. So I have already calculated this amount to be about 61% of their net income. Now we're going to take into account now the partner's available income. So let's say in this example, Lisa actually makes $70,000 net after taxes, and we put Lisa's income under John's column, and then John's income after taxes of $50,000. Okay. Now, the next question that we should take into account is how long will they need extra income for? So a good way to measure this is to ask John and Lisa, how old is their youngest child? Now, because their youngest child is 10 years old, and they want to make sure that they can live at home until they finish their education and are able to find a job and be on their own, they would need income for about 15 years. Now, why 15 years? Every time you do insurance needs analysis, you want to make sure that you assume that the worst is going to happen tomorrow. It's not about what if something happens to me in 20 years or in 10 years, but what if something happens to me tomorrow? Okay? So once we input these numbers, you will see that if John were to die, because in this case, Lisa is a higher income earner, there will only be an annual income shortage in the household of $3,200. But if Lisa were to die, because she's the highest income earner, there will be a total shortage of $23,000 per year. Now, when we take into account for how long they would need this income and a 5% rate of return and a 2% rate of inflation, that would leave what's called the income needs at $39,000 for John and $286,000 for Lisa. The next that we're going to take into account is the available assets. One thing to keep in mind when you do your assets is to make sure that they're assets that you're willing to liquidate if something were to happen. So let's say that John has about $15,000 in savings. Lisa's a better saver than John, so she has $30,000 available. Again, both Lisa and John have RSPs, but we don't want to include this here because John or Lisa don't want to cash in their RSPs if something were to happen, just because of the tax implications that might have. They want to make sure that they still save for retirement, so we are not going to include registered investments into this example because both of them are not willing to sell them. Then we're going to take into account the existing life insurance that both John and Lisa have through work. So let's say John's employer is a little more generous than Lisa's, and he gets 2 times annual income. So he has about $120,000 of insurance through work. Lisa, on the other hand, she has about, let's just say, $100,000. The other thing that we've taken into account is the CPP death benefit, which is something that every Canadian gets as a benefit from the government once they die. This will leave a total of $137,000 and $132,000 of available assets. Now, once we do all those numbers, that's going to give me the total life insurance need. So as you can see here, even though there are a couple, once we actually look at insurance from a need perspective rather than an amount, John will need $637,000 of insurance, whereas Lisa will need $879,000 of insurance. So then we're going to go and produce a nice little report, and that's going to show the total amount of insurance each person needs. Now, why is this important to know, and why is it important to calculate the needs? The reason is because at times I sometimes see couples thinking that they should get the same amount, but based on this calculation, you will see that in this example, having the same amount might not be appropriate for the circumstances. So once you see that the summary of cash needs or immediate needs, income needs, and the available assets, which will give you the total. You can also go down here and see basically a breakdown of everything that John and Lisa, all the information that they provided. Now, it is important to remember that my job as an advisor is not to tell you what you should do. It is your decision how much insurance you're going to buy at the end. You can buy more or less than the amount of insurance that you need, but at least with the needs analysis, you have a better understanding of your needs and your financial liabilities. So now that we have determined the amount of insurance that John and Lisa need, we can proceed to look at some quotes. So for the quote, let's assume that John is 41 years of age and Lisa is 39. Now from the needs analysis, we determined that John needed a total of $637,000. So let's just round it up to $640,000. And Lisa needed a total of $879, so let's just round it to $880,000. Now also because of their mortgage, we determined with John and Lisa that they would need a 20-year term. Okay, so we're gonna get a quote for a 20-year term. And also make sure we put in Lisa as a female, everything, and they're both non-smokers. So now we're gonna go and proceed to get a quote for that. Okay guys, so we have here the premium survey for both John and Lisa that basically compares the price for both from every company. Okay, so as you can see here, the first line would be the price for Lisa, and the second one would be the one for John. And this would be the total combined price from the insurance company. So as you can see, if we go through the list, you're able to see basically the prices of every insurance company. Once we have determined the prices, then we can proceed and discuss which company would be better for their individual situation. Okay, so now that we determined how much insurance John and Lisa need, and we looked at some quotes, you might be tempted to say, oh, I just want to get the better price. However, there's another step that we need to take before we can even begin with an application. Because remember, just because you see a plan doesn't mean that you can just go and sign up for it. You have to qualify. So we have a phrase in this business that says, health buys life insurance and money only pays for it. And the truth is that with the plans that we looked at, the coverage might be the exact same and the premiums can come very close to being the same. However, qualifying for that plan for each company, it's a whole different story. Let me give you an example. Now, if we look at these prices in this example from Manulife and Empire Life, you can see that they're pretty much just a few cents apart. So let's assume that John is 5'10" and he weighs 260 pounds. So if we were to take that information and refer to the underwriting guides from each company, we would learn that even though the price might be almost the same, John would be considered overweight with Manulife. So based on his height and weight, John would actually expect a minimum of a 50% rating. So what exactly does a 50% rating mean? That means that that insurance company believes that John is a higher risk than average. So in this case, John would actually end up paying 50% more than the rates that were quoted with Manulife. However, with Empire Life, based on their underwriting guides, John would qualify for standard rates, meaning the same rate that he was quoted. So it is very important to understand that every company looks at people differently. Now, as another example, let's assume that John is still 5'10" and 200 pounds, but he's a type 2 diabetic. Now, in this case, Empire Life's underwriting guidelines would say that John would get a 50% rating at best because of diabetes. Whereas with another company like IA Financial Group, he would actually qualify as with standard rates if his diabetes is well controlled. So it is very important that before you try to jump in an application just to get the best price, that you understand how that company is going to look at you. Now, at this point on the application process, it's very, very important that you are very open and honest with your broker. Just remember, your broker is not the one making the decision to approve or decline your application. They're just there to make a recommendation. And without any vital and detailed information, they're not going to be able to make the best recommendation for your specific situation. So now that we have determined the amount, the type of coverage, and the best insurance company for John, we can proceed with an insurance application. Now, one of the most common questions that I get when we get to this stage is people asking me if I can mail them the application or email it to them and they can complete it on their own. Unfortunately, every life insurance application must be completed with an advisor. Whether it's in person or through a virtual meeting, it cannot be completed by a client. It also cannot be completed over the phone because, unlike car insurance, every life insurance application must be signed. Again, whether it's in person with a wet signature or through an electronic signature, we can't just complete an application over the phone without any signatures. It's also important to remember that an insurance application is not a contract that you're signing. It is just that, an application for insurance. The contract will be issued if the policy is approved. Much like applying for a job, you're basically doing an application telling the insurance company, hey, I want to apply for insurance, here's my information, please review me. So once we start the application, there's going to be some lifestyle questions and some medical questions. Also, depending on the age of the person, the insurance amount, and the insurance company, because remember, every insurance has their own requirements, there might be medicals required. It is very important to know that you never have to pay for the costs of any medical exams that are required to apply for insurance. Now, once you have completed the application, it has been signed and sent to the insurance company for processing, you're going to get a call to schedule medical appointments if they are required. Now, you usually don't have to go to any facility or hospital to do this test. Usually, a nurse will come to your home or your office or wherever you're comfortable to do the test. And again, there is no cost for you at this point. So once the application has been sent and all the medical requirements received, the company can begin with the underwriting process. Now, one thing to keep in mind is that this process can vary from anywhere from a couple of weeks to up to 3 months. In my experience, the number one reason that underwriting takes a long time is what's called the doctor's report or attending physician statement. In my experience, it's usually doctors that are procrastinating to send the report that delay insurance applications. Now, once the application has been processed and the insurance company has made a decision, there are 5 possible outcomes that can happen as a result. Now, number 1 is that your application is approved standard, meaning that you qualify for the rates that were quoted to you. Now, there's a second outcome, and this only applies for some insurance companies, only for some plans and minimum amounts, which is that you get approved with preferred rates. What that means is that you are in very good health and the insurance company can actually offer you lower rates than what you were quoted for. Outcome number 3, your insurance application is postponed. Now, this is not the same as a decline. It is just the insurance company telling you, hey, you might have to look into something, or you might have to check something with your doctor before we can make a decision. Usually, if an application is postponed, there might be something that you need to follow up with in order for the company to consider you again in the future. Now, outcome number 4, you are approved with a rating. Now, as I mentioned before with John's example, a rating just means that the company still approved your application, but you have to pay a higher premium because you are considered a higher risk. So outcome number 5, your application is declined. Usually when somebody is declined, the insurance company will say whether it's a temporary decline. For example, well, we will consider you again in 2 years' time if your situation improves, or they might just tell you that you are declined with no future consideration. If they tell you that, they're basically telling you that they will never consider you again for insurance because of whatever conditions or lifestyle choices you have made. So once a decision has been made on your policy, the insurance contract will be issued at that time. At this point, you should be contacted by your broker to arrange a time to meet and deliver the policy to you. Now, whether this is a physical delivery or an electronic delivery, this is a good time for you to review the policy with your broker and ask any questions that you might have regarding the policy or the contract. So please keep in mind that applying for life insurance is a whole different process than applying for car insurance. The only thing that life insurance and car insurance have in common is the word insurance in it, because everything else is completely different. I hope I was able to answer a lot of the questions that some of you might have regarding the life insurance application process. If you have any additional questions, please feel free to post them on the comments below. And if you want to contact me directly with any specific questions, you can find my information on the description below. I hope you guys enjoyed the video. Thank you for watching and see you in the next video.